Hello and welcome to the week 3 update for my Trading 212 investment portfolio. It's been a busy old week which started strongly through to Wednesday before absolutely falling off a cliff in trading on Thursday and then managing to stabilise on Friday. In this video I'll be showing you my biggest movers, most of which were unfortunately downwards moves this week, alongside some new shares I managed to pick up and a couple of small dividends which were paid. I'll also be talking about what I'm looking for next week and where I'm hoping some buying opportunities might arise. So let's get started. So hello and welcome to the channel. My name is Henry, and for everyone watching for the first time, this is a brand new channel to share the progress of my Trading 212 investment portfolio, as well as to give you my views on certain stocks and trends developing within the market, which you'll hopefully find useful and interesting and can take some value from them. I believe in today's world it's becoming increasingly important for young people to take proper care of their finances early and to try and build up some form of personal wealth to give a financial cushion if nothing else. I think it's important now more than ever because of things like decreasing pensions, high retirement ages, rising house prices, student loan debts and greater risk of unemployment, which has recently been amplified by the pandemic. All of which are problems disproportionately affecting younger people. I realise that that's a very doom and gloom opinion, but I do think it's important for young people to look after their financial security. And it's something which you're never really taught in school or by your parents. We are told saving money is good, but never really how to do it. So hopefully this channel can be a place for people to learn together and share ideas. That's my aim anyway. So before I dive into my portfolio, I want to say a massive thank you to the first 7 subscribers to this channel. Your support is very much appreciated. For anyone new to the channel, please hit that subscribe button to follow my progress with this portfolio right from the get-go and to hear my thoughts on the market in general. I would really appreciate your support. So as you will probably have figured out by now, I use the Trading 212 as my trading platform and I love it. I use the desktop version for my technical analysis and the app pretty much for everything else. The desktop version of Trading 212 doesn't have as much detail as the app in terms of the financials and the balance sheet, income statement, that sort of thing. So for the purposes of this video, I am going to dive into the app and I will leave the desktop version in the background. So as we enter the app, you can see my portfolio is currently standing at 10,569, a profit of 1,493 and a gain of 16.45%. So given the battering we took on Thursday, I don't think this is that bad. We did peak in the portfolio to around 22% earlier in the week, so roughly 5-6% down. Not as bad as the wider market, as much of my portfolio is fairly tech heavy. Although the tech stocks were also affected, the damage on them wasn't quite as bad as some of the other sectors, like industrials and banks. The Dow Jones, for example, was more greatly affected than the S&P 500 and the Nasdaq, which are more tech heavy. So let's move down and have a look at the effects on some of the individual stocks within the portfolio. 3i Infrastructure is a stock which seems to have very low levels of volatility. It doesn't seem to move drastically in either direction, and is roughly even for the week, if not finishing slightly higher, which is great. Looking at some of the tech and growth stocks, Alibaba, Alphabet, Amazon, Apple, they're all down roughly 2% for the week after recovering slightly yesterday. It feels as if there's a lot of investors who are ready to pounce on these stocks should they drop strongly again, as any time they seem to dip, they do bounce back really quickly. Moving down to some of the banks, Bank of America, obviously banks are quite heavily affected, dropped yet over 10% this week, down from high 80s, 28 down to 24. Bank of Montreal, similar story, fell off its highs, dropped 10% roughly again. And Barclays, similar story, dropped from quite a strong rebound, to be fair, down from 130 down to 116. Coca-Cola, another one I just wanted to focus on today, dropped quite heavily, 8 or 9%. I think I was up in this before the start of the week, so I'm just slightly down in this now, so it has dropped by that margin. You can see it dropped all the way down to 38, bounced back pretty well, albeit not as well as maybe some of the other stocks, especially the tech stocks, and it seems to have settled around the mid-40s, which is roughly my average price. I did try and take advantage of the drop. If we go into history here, you can see I did buy 0.9 of a share on Thursday after the dip to take my holdings from 8.1 up to around 9 shares. Next one I wanted to speak about was dark group. So this is the biggest loser of the week, unfortunately. Those who watched my last video will know I was very happy with myself. This was up 70 odd percent, 73, 74% last week. I've been brought back down to earth this week with a loss of about 30% within a week. So reality has well and truly kicked in. I think the start of the week it was up at over £1,000, so £10 a share. It's dropped to just over 800, a loss of about 30%, and it's settled at 42% up. So still doing really well, still a big gain. Not as good as it could have been, although I will definitely be holding this for the long term. I only see this going one way. Jet2 is a fantastic company for an airline. It's got a really strong balance sheet. If we scroll down, you can have a look in here. I have mentioned this previously, but for those that didn't see it, cash and short-term investments over 1 billion, short-term debt 0, long-term debt 1 billion. So they hold more cash than debt, which for an airline is fantastic. So I will be holding this for the long term. The next one to highlight is Inmode. Inmode is another one I've mentioned in my previous videos. It's had a bad week. I think we're down 10, 15% nearly on this. It took off phenomenally well after I bought it, which was only a couple of weeks ago now. And it's starting to get to a price again, PE under 18, where I think it's really good value. It's a growth stock. You'd expect PE to be a lot higher. It's got a fantastic balance sheet income statement. And when I bought this at 27.5, I was hoping to double my money on this. I'm expecting it to get to high 40s, maybe early 50s. When it plummeted on Thursday, I was caught in two minds as whether to dive in and buy more or to hold fire. In the end, I held fire, hoping it would drop further on Friday. It didn't, and it stabilised. So I'll be watching this one very closely early next week. And if it falls below my average price, I will be buying more. Next stock to mention is Johnson & Johnson. Another one which dropped this week, surprisingly, as it doesn't tend to fluctuate very much. It's seen as a recession-proof stock and actually performed really strongly during the recent downturn. It dropped massively on Thursday, for it anyway, I think 4 or 5%, down to 141, 140. Again, I was in two minds as whether to buy late Thursday or wait to Friday. I initiated a very small position and bought, I think 20, 25, 30 quid's worth, hoping it was going to drop further on Friday, at which point I'd really follow in. PE ratio at the moment is sitting at just short of 18, 17.9, which I think is fair value. It's reasonable. I was hoping it was going to drop further on Friday, so I could really take advantage if it dropped into the 15, 16, which is ideally where I'd like to buy this stock. So if it drops further next week, I will be really building up that position. The next stock to talk about is Tesla, a stock which, in my opinion, can never be talked about too much. It was one of the biggest winners and losers of the week, if that is possible. It rose phenomenally well, up over $1,000 a share for the first time before falling back on Thursday, Friday to the sort of low 900s. But still a net gain for the week. I do think it will go back above that 1,000 level pretty quickly. I said in my last video I expected it to go above 1,000 within the next couple of months, and it did it a lot quicker than I expected, and I expect it to go even higher from here. The final stock pick I wanted to focus on this week was the Vanguard Footsie All World High Dividend Yield ETF. This is another stock which I took advantage of during Thursday's dip and bought another share at £38, which is just above my average price. I see this stock as very important to my portfolio as it provides balance to an otherwise fairly tech-heavy and growth-orientated portfolio. Now you might wonder why I don't just invest in individual dividend stocks. The reason is I think a lot of high dividend paying stocks are actually fairly risky. I see a lot of people on YouTube raving about AT&T and Realty Income, both of which are fantastic companies, but they also both have really high payout ratios, and that's something that concerns me a little bit. So instead, I decided to invest in this ETF as an alternative to some of the higher dividend yielding stocks. I still hold some dividend stocks which I really rate, like the banks, Johnson & Johnson, Unilever, McDonald's and Coke. But opposed to those sort of really high dividend payers, I invest in this instead. So I'm just going to flip over to the Vanguard website and show you why I love it so much. So you can see here there is 1,634 stocks in the ETF, so a huge number, so well diversified. If we flip over to portfolio data, scroll down, you can see it's got a really sensible price to earnings ratio, a really sensible price to book ratio, really well diversified geographically, quite high rating stakes there, but otherwise fine. Well diversified in terms of sector. And if we come down to the actual holdings in the portfolio, Johnson & Johnson is the highest at 2.2, but then everything else is in the ones. If you flip onto page 2, you can already see stocks weighting less than 1%, Coke weighting less than 1%, AbbVie there less than 1%, and it just gets lower and lower. So the diversification on this ETF is fantastic. So finally, if we flip over to the distributions page, you can see it pays a dividend of just under 4.1%. There is a management cost on this ETF as well, which I think is about 0.25. So your dividend receivable is roughly 3.8, which is, still a great yield. Albeit not quite as high as what you would get if, for example, you bought AT&T on an individual basis, but it carries less risk, and therefore for me it's the better decision. Finally, I just want to show you what I bought this week, what I've tried to buy to take advantage of the market dropping on Thursday. So if we just go back into the app and into the history section, you can see I bought some Johnson & Johnson on Friday and Thursday, on the share in Coke, another share in the Vanguard's All World High Yield, some more Tritax Big Box, and some Barclays Bank as well when that dropped, just to bulk up some of those positions. I think the total cost of those acquisitions is probably, 120, 130, so no, not a massive amount. It would have been a lot higher if the market had dropped further on the Friday, and I would have gone in much heavier to try and take advantage of some of the dips. Cross over into the dividends page, you can see some small dividends have been paid from Microsoft, Johnson & Johnson. Just bear in mind this portfolio has only been going 2-3 months, so the total received is still quite low at £13.24. I do have a couple of big ones I'm expecting towards the back end of that month from my ETF, so hopefully that'll grow to around £25 by the end of the month, which for 3 months isn't bad going, and it's certainly a lot more than I would have got with the cash sat in the bank. So that just about wraps up the video. I hope you found it interesting and useful. Please let me know your thoughts in the comments. It would be really good to hear your opinion. If you enjoyed the video, please drop it a like, and also press that subscribe button to see more videos from me and to keep track of this portfolio's progress. Your support really would be massively appreciated, and as always, see you in the next one.